Hello everyone, welcome to EduTap. So today we are going to start with the second part of the Commerce and Accountancy Mega Revision series. So we have already discussed few questions in the form of MCQs in our first part. So today we are going to move ahead with our next set of questions. So all these questions are very important from the examination point of view, and overall we are going to discuss today 25 MCQs with their proper explanations and the solutions, right? Okay, so without delaying further, let's directly jump to the first question of the day, which is which accounting standard deals with the preparation of the cash flow statement? So cash flow statement is in your syllabus, so you have to tell me which accounting standard deals with the cash flow statement. AS1, AS3, AS5, AS7, none of the above. So see, you need to remember all these numbers of accounting standard which is in your syllabus, such as you have the syllabus, you have in your syllabus AS10, that is accounting standard for the property, plant and equipment, AS13, AS11, AS9 and AS2. Okay, so these are in your syllabus, but apart from that you have the topic of cash flow statement. So therefore this question is coming in front of you. Okay, you have to tell me the accounting standard for the cash flow statement. So the answer would be AS3, right? So let's look at the explanation first, then we will move ahead with the answer. So AS3 deals with the cash flow statement. And what is this cash flow statement? Very easy. In any enterprise, when you look at the balance sheet and the profit loss account, that basically gives you the idea. First of all, let's talk about the PL account. So PL account gives you the idea about the what is the profit and loss for a particular period, right? In the accrual terms, in the accrual system of accounting. But on the other hand, when we talk about cash flow statement, it basically gives you the idea about the company's cash inflows and cash outflows. So when you want to look at the cash inflows and cash outflow, you are going to analyze the cash flow statement, not the balance sheet and the profit loss. Balance sheet basically gives you the idea about the position of assets and liability in a particular time period, or in a point of time, you can say, right? So information about cash flow of an enterprise is useful in providing what? In providing users of financial statement with a basis to assess the ability of the enterprise to generate cash and cash equivalent. So it gives you cash inflow and cash outflow. It gives you the idea about the ability of the enterprise, how much cash they can generate in next financial year, right? Okay, so this is about cash flow statement, only the basic part of it. We will move ahead with the more advanced question. Okay, don't worry about that. So the answer would be AS3, that is option number B. Now let's move to the second question of the day. It says, which of the following would not be considered as the application of cash while preparing the cash flow statement? Now see what is happening here. In the cash flow statement, what do you have? So you try to calculate, or you try to find out the cash flows from operating activities. Then you try to find out cash flow from investing activities. Then you try to find out the cash flows from financing activities. So in a financial year, you try to find out the cash from all these three activities, that is operating, investing and financing. Then you add it and you have some opening balance of cash initially. Then you have generated, or you have used the cash from all these activities, all these three activities. So then you will find out the closing cash or cash equivalent at the end of the year, right? So this will be the flow of the cash flow statement. Now the question says, which would not be considered as the application of cash while preparing the cash flow statement. So it is talking about, we have some sources of cash and we have application of cash. What is sources? From where we are generating the cash. But what are applications? From or you can say, to the activities we are using it. These are applications of cash. So when you do redemption of preference share, it is the application of cash. Why? Because in redemption of preference share, you are going to pay the cash to the preference shareholders. So your cash is going to be paid to the preference shareholder. So it is the application of the cash. So it would not be the answer, because the question is asking what would not be considered as. So this would not be the answer. Second says purchase of investment. Again, purchase of investment is also the application of the cash, because you are using your cash to purchase your investment. So this would not be the answer. payment of dividend, again the application of cash, it would not be the answer. Issuance of shares, it is a kind of sources of cash. When you issue shares to the outside party, you are going to generate the cash. This is not the application of cash, this is the source of cash. So this would not be considered as application, so this would be the answer, right? So option number D would be the correct answer here. So issue of shares is a source of cash, not the application of cash. So the correct option would be option number D, issue of shares, right? Okay, let's move to the third question of the day. That says, in preparation of cash flow statements, which of the following would be an example of the cash equivalent? Now see, in terms of cash flow statements, we have cash and cash equivalent. So first let's try to understand what is the definition of cash equivalent when we talk about cash flow statement. Okay, what is the definition of cash equivalent? Okay, let's read out the definition. So cash includes your cash in hand and demand deposit with the banks. That is correct. But what is this cash equivalent? See, in terms, when we talk about cash flow statements, the cash equivalent is going to include your short-term, highly liquid investment. So two things are very important here. First one is कि these cash equivalent will be short-term, highly liquid investment that are readily convertible into cash, so that you can convert it into cash very easily, right? But the second important point is that they should be subject to insignificant risk of change in value. That means there should not be any risk in their value, the value you are going to get from these investment. There should be no uncertainty about the amount of value. There should be no uncertainty about this. Okay? There should not be any significant changes in the values. You can, with 100% surety, you can say that this much amount we are going to get when we are going to sell our investment. You should be sure enough. Then only they will be in the cash equivalent. Otherwise, they will not be including the cash equivalent. Suppose you have bought the shares, right, of some other company. You can't see, they are liquid because obviously you can just sell it in the market itself and they are readily convertible into cash. But investment in shares would not be included in cash equivalent. Why? Because they are subject to significant change in value of the investment. That's why. But when you have any debt instrument, debt security, or suppose you have any ultra short term investment, debt investment, whose value would not be changed and whose value is not subject to change in the amount, then they can be considered as the cash equivalent, right? So let's look at the question again. It says, in preparation of cash flow statement, which of the following would be an example of cash equivalent? A option says acquisition of preference shares shortly before or just before their specified redemption date. So in case of preference share, just before the specified redemption date, when you have acquired that, so that means they are highly liquid. You can, and preference shares are basically are a kind of secured investment, right? Not the equity shares. They are not the equity shares. So just before the redemption date, you have acquired it. So you can very well convert that into cash. They are readily available and they are not subject to any change because they are not the equity shares, right? So yeah, this can be considered as the cash equivalent. Now, B option, bank deposit with ultra short term maturity. So again, when you have bank deposits with ultra short term maturity, again they can be converted into cash, and bank deposits are insignificant. Basically they are not subject to any change in the value. So whatever bank deposit you have, if they have the ultra short term maturity period, right, so they can also be considered as the cash equivalent as far as cash flow statements are concerned. Demand deposit banks, no, you can't consider it. Demand deposit basically are considered as the cash only, not the cash equivalent. They are equivalent to cash only. See, we have discussed this now in the previous slide. Cash include what? Cash in hand and demand deposit banks. Okay, so question is asking about only cash equivalent, so this would not be the answer. Cash in hand, again this is included in the cash only, so this would not be the answer. So the answer would be option number E. Suppose the question is asking about the which of the following is the example of cash and cash equivalent. If the question is such like that, then all of the above would be the answer, right? because all are included in cash and cash equivalent. ठीक है, clear? Okay. So in this case, we are just talking about cash equivalent. So the answer would be E, both A and B. ठीक है, okay. Now let's move ahead with the fourth question of the day that says, from the following information, find out the cash flow from operating activities. So we have discussed this thing, we have three types of activities: operating, investing, and the financing. Operating means whatever regular business activity the business is doing, and whatever cash the business is generating out of it, that will be operating activities, and whatever cash payment they are doing it, that will be included in the operating activities. What is this investment activity? Suppose you are investing in fixed asset, like you have purchased the machinery, or when you are selling it, that will be included in the investment activities. And for the financing, when you are basically generating your funds, okay, you are trying to increase your sources of funds. You need funds, right, in your company, and for that you issue equity shares, you issue debentures, you took the bank loan. So all these will be included in the financing part, because you are financing your funds, you are generating your funds. Okay, so therefore they are all financing, they will be included in the financing cash flows. Now the question says you have to find out the cash flow from operating activity only. So very easy question. Cash receipt from the sale of goods and continuous services. So obviously that will be added in the operating activity, that will be added because you are generating cash from the operating activity. So 5 lakh will be added, right? Cash payment to supplier of goods and services, 2 lakh rupees. So you are giving the cash. So your cash is being paid. It is the outflow of cash. So you will deduct 2 lakh from the 5 lakh. Cash payment to employee, again it's an expense. So 0.5 lakh will be again minus. Cash receipt from sale of property, plant and equipment. So now you have sold the property, plant and equipment. That is not the ordinary course of business activity. That is extraordinary. That is basically non-operating activity. So when you have sold the PPE, that is property, plant and equipment, or for that purpose any other fixed asset, that will be included in the investment activities, not in the operating. So only these three will be counted under operating activities. So 5 lakh minus 2 lakh will be 3 lakh. 3 lakh minus 0.5 lakh will be 2.5 lakh. So option number C would be the correct answer here. Very, very easy. So cash receipt from sale of property, plant and equipment would not be considered because it's a part of investing activity, as we have discussed, right? So the answer would be C, 2.5 lakh for the question number 4. Now let's move to the question number 5th. It says all of the following would be shown as the part of cash flow from financing activities. So what are these financing activities? When you are sourcing your funds from the outside, like you are taking the loans, like you are issuing the shares or debentures, all these are financing activities. Okay, you are financing your funds, that's why. Now so it is asking all of the following would be shown as the part of cash flow from operating activities, except, so you have to tell me which is not included in financing activities. So cash proceeds from issuing of shares or other equity instruments, so they will be included obviously because you are issuing the shares. Amount or cash repayments of amount borrowed, so they are also the part of financing activity. So whatever you are generating from the outside party and whenever you are paying to it, that will also be included in the financing activity. One is inflow and another one is outflow, that doesn't matter, but that will be included in the financing only, right? Third option, cash proceeds from issuing debentures, again this is the part of financing activity. Fourth option says cash receipt from sale of equity or debt instrument of other entities. Oh, now it is saying you are getting the cash from sale of equity, but equity of some other entity. So that means you have earlier purchased the shares of other entities. So that is your investment activity because you have purchased the shares of other entities. You are not issuing your shares, you are purchasing the other entities shares, so that will be included in your investment activities, and when you are selling it, so that will also be counted under the investing activity. So this will be counted under the investing activity. So this would not be included in financing activity. So the answer would be option number D here. Very, very easy question, right? So cash receipts from sale of equity or debt instrument of other entities, that is the key word here. Okay? So it would be counted as the counted under the investing activity, not under the financing activity. So the correct answer would be option number D. Yes. Okay. Now let's move to the question number 6. It says you have to calculate the cash flow from operating activities using indirect method. So we have two methods for the cash flows. Cash flow from operating activities, you can do this by two methods. One is direct method. Direct method is very easy. I'll give you the example as well, don't worry. For the direct method, suppose you are generating the revenue by selling your goods or services. So you are going to add it, whatever expenses you are doing in terms of cash, whatever outflow is there in terms of cash for these operating activities, you are going to minus it from this. So you will have the net cash flow from the operating activities, right, in the direct method. But in case of indirect method, what to do? In case of indirect method, you start from the net profit. You start from the net profit. Then you reverse all the non-cash and non-operating expenses, because when you have taken net profit now as your initial item, in this net profit, all your non-cash and non-operating items have also been adjusted in the PL account. From PL account, you get your net profit now. So in this net profit, you also have your non-cash expenses, non-operating expenses, or you can say non-cash and non-operating incomes as well. They are included in this net profit. But you need to calculate the cash flow from operating activities only. So you have to adjust all those non-operating and non-cash items to get to the amount which is your net cash flow only from operating activities. Simple enough, logical enough. Now let's read out the question now. It says net profit is 23,000, easy. Depreciation is 4,000. Now understand it very carefully. Depreciation is an expense, non-cash expense, right? Now depreciation would be charged in the PL account to get to net profit amount. So that means while you have calculated this net profit, this depreciation is already deducted while calculating this net profit. So you have to adjust this. So all the non-cash and non-operating items or expenses, what you have earlier done, you have to again reverse it. So for depreciation, you are going to add this depreciation in your net profit to calculate your operating profit or net cash flow from the operating activities. So 23,000 is your net profit. You have to add back 4,000 because it's the amount of the depreciation. Again, next item is a loss on sale of asset, that is 2,000. Again, see, understand, you have the loss on sale of asset, non-operating expense. Again, in the net profit, in the 23,000, this amount has already been adjusted. In the PL account, you have already taken 2,000 in your debit side, isn't it? But from the point of view of the cash flow, this should not have been taken as the expense because this is not the cash expense. This is the non-cash expense, right? So you have to again add it back into the net profit, just like we have done for the depreciation. So you have done 4,000 plus, again you will do 2,000 plus for the loss on sale of assets. So it will be 23,000 plus 2,025 plus 4, that is 29,000, because nothing else is given to you and you are assuming no change in working capital. So your answer would be 29,000, option number B. See, it is the answer, 29,000. Very easy question. Okay? And I have explained the logic of this as well. Okay? But let's read out the explanation as well one more time. Under the indirect method, net cash flow from operating activities is determined by adjusting the net profit or loss. So the first item you are going to take is your net profit or loss. Okay? Now after this net profit or loss, you are going to adjust all the effect of changes during the period in inventories and operating receivable and payable. Basically, it is talking about changes in working capital. ठीक है, you are going to adjust for the changes in working capital as well, right? But in this question we don't have any changes in working capital, so we didn't adjust our amount as per A point, but we have adjusted our amount as per B point. Non-cash items such as depreciation, we did adjust for depreciation. And what's the trick? Whatever is your expense in PL account, you are going to add it back, because you are doing reverse entry to get to the amount you have generated from the operations in cash terms. So you are adding it back. C point is all other items for which cash effects are financing or investing cash flow. So this is same. If some item is there which is basically investing or financing, that you have adjusted in calculating net profit, you have to adjust that as well. Okay, so all the non-cash and non-operating items you have to adjust, and we did so, and we have got our answer as 29,000. Very easy. Okay, let's move to the 7th question of the day, that talks about calculate the net cash used in investing activities. Now you have to tell me what cash you have used or what cash you have generated out of investing activities. So obviously there could be anything, na? Whether you can generate the cash, that is inflows are more than outflows, or you can say net cash used in investing activities, that means outflows are more than the inflows. Easy enough. When outflows are more, you will say net cash used in investing activity. When inflows are more than the outflows, then you will say net cash from investing activities. Okay, so the question says net cash generated from operating activities, net cash used in financing activities, cash and cash equivalent at the beginning and at the end. So it is very easy. See, you have the opening balance of cash and cash equivalent. You are going to adjust all the amount of all the activities. First, operating activities. Net cash generated from operating activities. So you are generating it, so you will add it. This is the opening balance of cash, and throughout this year, whatever cash you have generated, we are going to add it or deduct it. So from operating activities, we have generated 3,09,000. Easy. From financing activities, we haven't generated anything, but we have used our cash into the financing activities. So you are going to take it as the negative amount, minus 30,000, because you are using the cash in the financing activities. Now it says, okay, only these two activities are given to us, and we have to find out the investing activities. Okay, so let's take the investing activities as X. Okay, and if this amount comes out to be negative, so that means you have used it. Use the amount in the investing activities. And if it comes out to be in positive, then you have generated the cash out of investing activities. Okay, but the question is asking about used, so most probably it will come out in negative. Okay, and it will become equal to what? Closing cash and cash equivalent, that is 2,12,000. So you will solve this and you will have the answer of your X. Okay, let's look at the calculation now. See, this was the beginning, this was the end. So what we did, we have net cash flow from the year itself, this amount which we have discussed in the earlier slide, 3,35,000 and 2,12,000. When you will adjust this amount, when you will transpose this 35,000 here, so it will become 2,12,000 minus 35,000. This is what we are doing here. That becomes your 1,77,000, right? Now this 1,77,000 is cash flow in current year, so that will be equal to what? The cash flow from operating activities, used in financing activities, and your cash flow from this investing activities as well. So see, cash flow from operating, cash flow used in investing, and cash flow from financing activities. So you will transpose all these things, right? And you will have the answer as 1,02,000, right? See, I have told you will get the amount in minus. As you can see here, 1,77,000, okay, and plus 30,000 you will do, and then you will minus it from 3,09,000. So you will get this amount, na, 1,77,000 plus 30,000, right, minus 3,09,000. So you will get the amount in minus. So therefore it is written ki cash flow used in investing activities, in plus sign it is written. That means we are talking about used in investing activities. So that will be, and the question was asking about used only. So that's why the answer is 1,02,000. Okay, okay, clear? Now let's move ahead. So this we have discussed. Okay, let's move ahead with the 8th question of the day. Again a numerical and very easy numerical, nothing very technical here. Income tax expenses for the year is 7,000. Okay. Income tax liability at the beginning of the year is 5,000. So beginning tax liability is 5,000. For the year is 7,000. That means you have to pay 12,000 in current year as a tax. But income tax liability, closing income tax liability is 3,000. Oh, so that means you haven't paid all the income tax liability. Something is left. That is 3,000 is left. So how much amount you have paid during the year? Very easy. 12,000 minus 3,000 will be 9,000. So you have paid 9,000 as the income tax in the current year. So the answer would be option number A, 9,000. Very easy question, right? Okay. Now this is the answer we have discussed. Okay. Now let's come to the 9th question of the day. It says the balance sheet of the company shows that the working capital of the concern, working capital has been increased by 383 lakh. Which of the following statement would best explain the reason for such change? See, please remember, this is the next topic we are discussing. It's about fund flow statement. In the fund flow statement, whatever change is there in the working capital. What is working capital? Working capital is current asset minus current liability. The reason for such change is explained by the fund flow statement, because fund flow statement gives you the sources of funds, of long-term funds, and the application of the long-term funds, right? So when you have the sources and application, okay, so when you will basically balance these two, sources and application, whatever amount you get, that basically gives you the idea about change in working capital. So fund flow statement gives you the reasons for change in the working capital. So the answer would be option number B. A fund flow statement may serve as the supplementary financial information to the users. Fund means what? Working capital, or you can call it change in working capital. Okay? So working capital is viewed as the difference between current asset and current liability. We have discussed about that, CA minus CL. Okay. So if we look at the balance sheet of two companies, of single company for 2 consecutive years, we can note that working capital, if they are different, and the reason would be what? Sources and the application. Suppose, for example, for the sake of example, let's suppose you have generated more fund out of sources, but you have applied less sources. The application of funds are less. So obviously there will be change in working capital. Okay, we will be looking at the format as well. Don't worry about that. Next question. This question we have done, right? So the answer would be fund flow statement. Question number 9 we have done. Question number 10 says, while preparing fund flow statement, in this question we will look at the format of fund flow statement. Don't worry. Which of the following item would not be shown as the source of fund? First of all, let's look at the format, detailed format as well. Now this is the fund flow statement. It gives you sources of fund here. See. And it gives you application of fund as well here. And look at the items one by one. Issues of shares, you are generating fund, right? So this is the source of fund. Issue of debenture, long-term borrowing, sale of fixed asset, operating profit you have. So all these are sources of funds, right? These are the sources of fund. Now listen to me very carefully here. Let's talk about the application of fund. Forget about this decrease in working. Don't look at this, right? And don't look at this as well. We will talk about this later. Now look at the application of fund. Suppose you have done the redemption of redeemable preference shares. So when you are doing the redemption, you are paying the fund, right? So this is the application of fund. Redemption of debentures, again you are using the fund. So this is the application of fund. Payment of other term loans, same. Purchase of fixed asset, you are purchasing the fixed asset. That means you are using your fund. Operating loss. Now, and payment of dividend and taxes. Now see, look at this chart very carefully. Suppose sources of funds are more and application is less. What is going to happen? How you're going to adjust the more amount of sources of fund? That means your cash is more, or you can say your fund is more. So that will be adjusted in the working capital. So we can say in a way that we have increased our working capital. We have increased our working capital because sources was more, but we are using it. See, let's take this example. Sources till this, but application till this only. So the rest of the amount is going to increase our working capital. Okay, current asset minus current liability will be increased as compared to previous year. Now suppose you have sources here, but your applications are here. So you are using more than your sources. So from where you are funding your extra expenses or extra application? Sources are here, but applications are here. From where you are sourcing this gap? From the working capital. Now your working capital will be decreased. So working capital will be decreased when application of fund is more and sources of funds are less. When there will be increase in the working capital? When sources are more and applications are less. Got the logic? Okay. Now let's look at the question again. While preparing the fund flow statement, which of the following item would not be shown as the source of fund? From where you are not generating your funds. Issue of share, you are generating it. Long-term borrowing, you are generating your fund. Sale of fixed asset, you are again generating it. Fund generated from operation, we have seen this. Also, you are generating the fund. Payment of dividend, no. This is the application. So answer would be option number E. Now clear? Okay. Now see, just like we have discussed before getting ahead with the next question, we have next question as 11th question. But before looking at the 11th question, I want to tell you one thing. Key from the examination point of view, you need to practice more and more MCQs. The more you practice your MCQs, the more will be your ability to get to the underlying concept and to retain that concept in the examination. You will be able to apply that concept in the examination when you have practiced more MCQs. So for that we have this ultimate test series. Okay, and you can get this test series from the website. You can check it out in the website and you can basically see ki, how this what you are going to have in this test series. I'll just show you from where you can find this test series. Okay, so just type in the chat section in the address bar, just type www.edutap.co.in. you will have this website. Inside the courses, go to the SEBI Grade A courses general. Okay, scroll down, you will find here test series for phase 2 and test series for phase 1 plus phase 2. Okay, and price is not this. When you will apply the coupon code of SEBI 55, you will have the flat 55% discount and this will come down heavily, right? So you can purchase this test series from the website itself and you can practice more, just like we are doing it right now, right? So this is important from the examination point of view. MCQs are important, and what you will get inside this ultimate test series, you are going to get around 12,000 MCQs, and these MCQs you will get in the form of chapter wise MCQs, solved PYQs, from the chapters, whatever PYQs have been asked, that is also included in chapter wise test, plus full length mock test you will get for the phase 1 and full length mock test you will get for the phase 2 as well, and current affairs test is also included, and descriptive tests are also included. So it is the ultimate test series where you are going to have all the type of test you need in your examination. Okay, clear everyone? So you can buy it from the website itself, right? Clear everyone? Okay, let's move to the 11th question of the day. That says, which of the following is or are true about the fund flow statement? We have talked about the fund flow statement in detail. Now you have to tell me the answer. Key, which of the following is correct? Fund flow statement is based on accrual accounting system, so that this is correct. So unlike cash flow statement, see, cash flow statement is based on cash system. Only cash inflows and cash outflows are going to be taken care in the cash flow statement. But in the fund flow statement, all the sources and all the application you are going to take it. Fund flow statement analyzes the sources and application of funds. This is also correct. The fund flow statement analysis helps the management to test whether working capital has been effectively used or not. This is also correct. So all of the above are true. So option number D would be the correct answer here, and we have already talked about the fund flow statement in detail, so we are not going to discuss that again, right? Okay, so the answer is option number D for the 11th question. Now let's move to the question number 12. It says ABC Limited wants to reclassify, again this is the question of accounting standard for investment. ABC Limited wants to reclassify a portion of the current investment purchased for the 20 lakh as long-term investment. So inside accounting standard for investment, you have the provision, or you have the basically guideline in which when you reclassify any current investment to the long-term investment. So investment, how many types of investment we could have? Current investment and non-current investment. So inside the accounting standard for investment, it is written that when you are reclassifying your investment from the current investment to the long-term investment, or from the long-term investment, when you are going to recognize it as the current investment, at what amount you are going to take it in your financial statement. So accounting standard gives you that criteria. Okay, so let's read out the question now. You have to reclassify the current investment as long-term investment as the company has decided to retain them. ठीक है? Market value as on the date of balance sheet is 25 lakh, and here the transfer to long-term investment should be carried at what? So at what price you are going to carry it, your long-term investment, when you are reclassifying from current investment to the long-term investment. So earlier you have recognized it as the current investment, but now you are reclassifying it. So let's look at the provision first as per the accounting standard, then we will look at the question again. Okay. Question, the accounting standard says where long-term investment are reclassified as current investment, transfers are made at lower of cost and carrying amount at the date of transfer. Now this was the first provision. Second guideline says where investment, see, you have to remember this, where from long-term investment you are going to reclassify it as the current investment, you are going to take lower of cost and the carrying amount at the date of transfer. But if you are reclassifying your current investment to long-term investment, then transfer should be made at the lower of cost and fair value at the date of transfer. So you have to look at the cost and the fair value, and whichever is the lower, you have to carry your long-term investment at that amount, because you are reclassifying your current investment to the long-term investment, right? Now in this question we are reclassifying our current investment, that is the second case, this case. Okay, look at the cost. So the cost is 20 lakh, right? And the market value as on this date is 25 lakh, but you have to take the lower of these two values, right? So 20 lakhs, 25 lakh, 22.5 lakh, either of 20 or 25 lakh. As per discretion of management, this would be wrong, and this is also wrong. So which is the less amount? The less amount is 20 lakh. So you are going to carry it on rupees 20 lakh, because we have seen here lower of cost and the fair value. So which is lower? 20 lakh is lower out of these two. Basically market value gives the evidence about the fair value. Na? What is fair value? You know, na? Whenever there is a willing and knowledgeable buyer and there is a willing and knowledgeable seller, and between these two persons, if any transaction is happening on the arm's length basis means on unbiased manner, when in an unbiased manner seller is selling the asset or investment and buyer is buying the investment at a price, that price we call it as the fair value, and this market value gives the evidence about the fair value. So when fair value is not written, you will consider market value as the fair value. Okay? So out of 25 lakh and out of 20 lakh, which is less? 20 lakh. So the answer would be 20 lakh, correct? Okay, let's move ahead with the 13th question of the day. Okay, it says which of the following aspects of accounting transaction or events are covered by the accounting standards? So we have accounting standards, right? So basically they are the rules and guidelines that has been provided under section. These accounting standards are notified under section 133 of the Companies Act 2013 and section 129 of the Companies Act 2013 mandates company to follow these accounting standards. Remember these sections as well. But the question is asking, what is the use of these accounting standards? Very easy. These accounting standards provide the recognition criteria for the economic events or the transaction, how you are going to recognize it. Okay, this belongs to this accounting standard. This is explained in accounting standard. We have different accounting standard for different accounting transactions, right? Like we have AS10 for the property, plant and equipment. We have AS9. We have inventories, AS2. AS9 is revenue recognition. So we have different accounting standard for different aspect. So in which accounting standard, which transaction is going to be included in, that gives you recognition criteria. So this is included in the accounting standard. And what else? It gives you it gives you measurement part as well, ki how you're going to measure that transaction. It gives you presentation of that transaction in your financial statement, and it also provides you what other disclosure you have to do in your financial statements. So this is the usage of the accounting standards. Got it? Got the clarity, logic? Okay. So the answer would be obviously what? Recognition it does, measurement it does, presentation it does, disclosure it does. So the answer would be all of the above, right? So this is what written here, whatever we have discussed in the previous slide. So recognition, measurement, disclosure, and the presentation. So answer would be option number E. Let's move to the 14th question of the day. This says, which of the following accounting standard has been withdrawn pursuant to revision of AS10 property, plant and equipment? Very easy question now. See, earlier we had two accounting standard for fixed asset. One was for fixed asset and one was for the depreciation. But then this AS10 has been revised and it has included depreciation part as well. Okay? So earlier there was this accounting standard 6, but it is not there right now. So now AS10 includes your accounting standard for the assets and as well as for the depreciation. Okay? So the answer would be AS6. Okay? Okay. Now see, option number B is the correct answer in the question number 14. Let's move to the next question, that is question number 15. It says, dash are IFRS converged standards issued by the central government of India under the supervision and control of ASB accounting standard boards of Institute of Chartered Accountants of India and in consultation with IFRS. Now listen to me very carefully here. What is difference between Indian accounting standard and accounting standard? I'll give you brief about it. See, earlier we used to have only accounting standards, right? But with time there is globalization, right? And now foreign investors also want to invest in our companies. So when they want to invest in our companies, they need to analyze our financial statements, and our financial statements are getting or were used to prepared with accounting standards only. So first they need to understand the accounting standards of India, then they need to analyze the financial statements. So it was a very cumbersome task. So as globalization happened, this IFRS, that is International Financial Reporting Standards, came into picture. These standards are used globally. In overall globe, they are used by different companies in different countries, so that the financial statement of different companies in other in different countries can be compared with each other. Now India didn't adopt it directly the IFRS. What it did, Indian authorities like the government India in consultation with the Institute of Chartered Accountants of India came up with their own accounting standard that are in basically in consonance or in compliance with the IFRS. They have not directly adopted it, but they have converged. We have in fact converged our accounting standard with the IFRS, and we gave them the name as Ind AS. We gave them the name as Ind AS, that is Indian Accounting Standard. Clear everyone? Now the question is saying, this is what the question is saying, dash are the IFRS converged standards that we have converged. Why we have converged it? Why didn't we just adopt the IFRS? Because of the economic needs, because of the country specific economic and social needs. Okay, that's why we have converged the IFRS to our accounting standard, and we gave it the name as Ind AS, that is Indian Accounting Standard. Clear? Now few companies need to follow the Indian accounting standard, and other companies, rest of the companies, need to follow accounting standard, right? So the answer would be what? Ind AS, that is Indian Accounting Standard. Clear? Question number 15 was easy, right? So this is what we have discussed in the previous slide. So these are the names or numbers of the Indian Accounting Standard. You don't have to remember each one of them, but you have to remember the accounting standard name whichever is in your syllabus. Like I'll give you the example. Suppose Indian AS revenue, it is in your syllabus. Property, plant and equipment, you have to remember this name, Indian AS 16. Okay? And in the accounting standard, the number is AS 10 for this property, plant and equipment. Similarly, whatever is in your syllabus, for that you have to remember the name and the number as well, right? Okay, now next question, question number 15. Dash are the IFRS converged standards issued. This we have discussed. Okay, this we have discussed. Question number 15, option number C is the correct answer. Question number 16th. which of the following is incorrectly matched? AS2 valuation of inventories, that is correct. AS9 revenue recognition, that is correct. AS10 accounting for fixed asset, that is also correct, or accounting for PPE, that is correct. AS13 effect of changes in foreign exchange rate, no, this is not correct, because AS13 is for investment. AS11 is there for effect of changes in the foreign exchange rate. So you should be remembering the name and the number as well. So AS11 is there to account for effect of change in the foreign exchange rate, not the AS13. So the correct option would be what? Option number D. Okay, this is wrong here, so this would be correct answer. So AS13 is accounting standard for the investment, right? So again, you have to remember the accounting standard with the name, which is in your syllabus only. Like valuation of inventory, you must remember. Cash flow statement, you must remember. Revenue recognition, this is actually PPE, AS10. Okay, so all these you have to remember. See, accounting standard 13 is for investment and accounting standard 11 is for effect of changes in the foreign exchange rate. So you have to remember all these accounting standard which is in your syllabus. All right. Okay, let's move ahead with the 17th question. A Limited has the inventory of soaps costing 80,000 rupees and these can be sold in the market for rupees 90,000. After paying a commission of 20% on sale price, value of inventory as per AS2. So accounting standard 2 says now कि whatever inventory you are going to carry, you are going to carry it at lower of cost and the net realizable value. Understand this very carefully. Cost, lower of cost and net realizable value. So here our cost is 80,000 and let's try to find out the net realizable value. Market value is 90,000, but you have to pay the commission of 20%. That is 18,000 commission would be paid on the selling price. 20% of 90,000 is what? 18,000, isn't it? Yeah, because 10% is 9,000, so 20% would be 18,000. So you are going to minus whatever expenses you are going to occur. Okay, so 90,000 minus 20,000 will be 70,000 and plus 2,000, 72,000 will be, right? So what is lower of 72 and 80? Obviously it is 72,000. So you are going to carry your inventory at 72,000 as per accounting standard 2. That is accounting standard for inventories. Very easy question. Lower of cost and net realizable value. So let's look at the option. Yes, option number D is the correct answer. Whatever we have calculated was the correct answer. 72,000. Got it? Very easy numerical, nothing very technical. Let's move ahead with the 18th question, and again it's a numerical. It says again about the AS2. It is asking you that the company deals in 3 products A, B and C, and the cost is given to you, that is historical cost is given to you and net realizable value is given to you. It is asking you compute the value of closing stock. Again very easy. For item A, which is less, historical cost or net realizable cost? 40 or 28? It is clearly 28. So we are going to take for item A 28 value. 32, 32, they are same, so you can take any value. For item C, 16 or 24, which is less? 16 is less. So you are going to add 28 plus 32 plus 16. Very easy. This will become 28 plus 2 is 30, 60. 60 plus 16, 76 lakhs. So the answer would be option number C, 76 lakh. Mentally you can do the calculation part, right? Okay, so option number C would be the correct answer. Very easy. I have told you in the beginning itself, while we were studying this AS2, you are going to take the lower of the cost and the net realizable value. So the answer would be 76 lakh. Very easy question. Okay, let's move to the next question. That is question number 19th. As per accounting standard 9 is applicable to what? Accounting standard 9 is applicable to revenue or gains arising from what? So very easy. Accounting standard 9 talks about the timing of the recognition of the revenue. And which type of revenue? Which you have gained from selling of goods, from rendering of services, and from interest, dividend and royalties. So the answer would be option number D. Construction contracts is not included in AS9. Hire purchase lease agreement is not included in your AS9, not the government grants. So option number D would be the correct answer here. So very easy. So this AS9, that is revenue recognition, revenue accounting standard for revenue recognition, means gross inflow of cash receivable or the other consideration arising in the ordinary course of business of an enterprise, such as the sale of goods. So whatever revenue you are generating from sale of goods, the timing of recognition of that revenue will be dealt under AS9. Whatever services you are rendering, whatever revenue you are generating, the timing of it will be dealt under AS9. Whatever enterprise resources you are giving it to other person, to other party, to third party to generate interest or dividend or royalty. So timing of that will be covered under AS9. Clear? And this standard is not applicable to all these scenarios because they have separate accounting standard. We have separate accounting standard for contract, for lease agreement, for insurance contracts. We have IRDAI guidelines. So that we have to follow, not this accounting standard 9 for these aspects, right? Clear? Easy? Okay. Now, next question, that is question number 20. When uncertainty of collection of revenue arises subsequently after the revenue recognition. Now, suppose you have recognized the revenue, but see, when we recognize the revenue, when there is a certainty in the amount and in the ultimate collection, two things you have to remember. When there is a certainty in collection of the amount or in collection of the revenue, and there is certainty in the amount of the revenue we are going to get, then you are going to record it, then you are going to recognize it in your financial statements. But it says uncertainty arises after recognizing it, after recognizing the revenue recognition. Then what is going to happen? How you are going to show it? How you are going to disclose it? Very easy. Adjustment in already recognized revenue? No. If the revenue has already been recognized, you are not going to adjust it. It is better to make the provision. Yes, it is absolutely correct. You need to make the provision when you have basically recognized the revenue in your accounting statement or financial statement. So option number B would be the correct answer here. Okay? Okay. So see, option number B is the correct answer for question number 20. Easy, very easy question. Let's look at the question number 21, and that talks about the AS10, that is accounting standard for property, plant and equipment. It deals with what? Tangible items of PPE expected to be used for more than 12 months. It is correct. It is correct, absolutely correct. Tangible items of property, plant, equipment expected to be used for less than 12 months. No. See, in AS10, we have basically two criteria. Let's look at the criteria first, then we will move again to the question. So inside PPE, what all items will be taken? Two conditions must be satisfied. First condition is when it is held for use in production. So we have machinery, we have equipments that we are going to use to produce our goods or to produce our units. So that will be included in our tangible items, or we are using it in supply of goods or services, or we are using it for giving it as rental to others. Basically, whatever machinery we have, we are giving it on rent to other party and we are receiving the rental income. So when we are using our machinery like that, then also condition 1 is satisfied, right? Or if we are using it for administrative purpose, like suppose we have the computer in our company, we are using it for administrative purpose, for doing the accounting. Okay, we are not using it to produce any goods, but we are using it. ACs in the offices, we are using it for administrative purposes. TVs for entertainment purpose. Table tennis. So big companies have the table tennis in their, big corporates have the table tennis in their offices, right? Like Microsoft and the Google as well. So for administrative purpose, for recreational purpose, if they are having it, so that also will be included in the tangible items, right? Now second condition must be fulfilled is that first condition should be fulfilled, and second condition is that you are having these tangible items that you are going to use for more than 12 months, for more than 12 months. Clear? So these two conditions must be satisfied to be covered under PPE, that is property, plant and equipment. So the question was saying AS10 deals with what? Tangible items of PPE expected to be used more than 12 months. So it is absolutely correct. You don't have to read out the other options. Okay? Okay. Let's move to the next question. Question number 22. Depreciation ceases to be charged when? See what happens. What is depreciation? First of all, understand this. You have value of your PPE as 1 lakh rupees. After 1 year, suppose it is going to be decreased by 10% of rate. So now it will be 90,000. Again, it will be decreased by 10%. So if you are using the straight line method, then again it will be decreased by 10,000, because in the straight line method, you are going to take equal amount each year. So that is 10,000 each year. So now it will be 80,000. Again, after 1 year, it will be 70,000. So these amount, we call it carrying value, carrying amount, book value, carrying amount, you can call it carrying amount, right? So now suppose there is some scrap value as well. There is some scrap value as well. Suppose after charging depreciation year by year, the carrying value is 20,000. Now the scrap value that you are going to get is 21,000. Oh, scrap value is more than the carrying value. Now you will not charge the depreciation because your scrap value is more than this. So it says depreciation ceases to be charged when assets residual value, this value, exceeds its carrying amount. Assets carrying amount exceeds its residual value. So when B is the case, when carrying amount is more and residual value is less, then you will charge the depreciation. But in case of first condition, that is in the option A, it ceases to be exist. But let's read out the other option as well. Option C says asset is not to be disposed by the entity, and asset is self, this is not going to matter. So the option would be option number A, when assets residual value exceeds its carrying amount. This is very logical, na? Carrying amount is 20,000, but scrap value or residual value is 21,000. How you can charge the depreciation on this 20,000? You can't charge it, okay, because your residual value is more than that, okay, so it ceases to exist. Okay, now question number 23, under written down value method. Now we have talked about the straight line method. I'll give you the example for the written down value method as well. Again, the machinery cost is 1 lakh rupees. You are charging depreciation 10%. So for 1 year, after 1 year, you are going to charge 10% as your depreciation. Then your carrying value will be 90,000. Now again for second year, this is the second year, you are again charging 10%, but you are going to charge 10% on 90,000, not on the 1 lakh rupees. This is what we call written down value method. Now your depreciation for second year would be 9,000, not 10,000. So it will be equal in a straight line method, but it will be less in written down value method. Okay? Basically you are assuming कि as the time is passing, your machinery is going to give you less and less benefits. So in the earlier years, they are going to give you more benefits, so you are charging more depreciation. But on the other hand, as the time is passing, you are charging less depreciation because the machine is giving you less benefit. This is the logic of this written down value method of depreciation. Okay? And in the straight line method, what was the logic? You are assuming that machine is going to give you equivalent benefit for all the years for which you are going to hold that. It is giving you equal benefit for all the years. Therefore, you are charging equal depreciation for all the years. Got the logic? Okay, the question says, under written down value method of depreciation, first option, amount of depreciation remains same. No, it is incorrect. Rate of depreciation remains same every, yes, it is correct. Rate is 10%, but you are charging it on the 90,000, on the carrying amount. So option number B would be the correct answer here. Okay, that is correct. Question number 24 says, goods purchased on 1st January 2021, $500, exchange rate is $1 equals to 70 rupees. Exchange rate on 31st March 2021 is, first dollar is rupees 60. Now see, we have this accounting standard for effect of changes in the foreign exchange rate. So from that you have to recognize the asset and loss in financial year 31st March 2022. So you have basically two cases there. First case is that ki, first of all, the transaction is happening on 1st January 2021. I'll write it here for you. 1st January 2021 transaction is happening. So on this date you are going to recognize your basically liability, because you are going to pay the amount to the supplier because you have purchased the goods, right? But on 31st March you are going to again recognize it at the closing rate. Whatever is the closing rate. Closing rate is $1 is equal to 60 rupees. Then again when you are paying it at 7 August 2021, again you will see ki what is the amount you are paying to your creditors. So in two cases you are going to recognize your profit or loss, in 31st March 2021 and on 7th of August. But the question is asking you a certain loss or gain to be recognized in financial year that has been ended on 31st March 2022, that is in this 31st March 2022. ठीक है? So let's look at this very carefully, then you will understand whole of the concept. Now AS11 talks about this effect of changes in the foreign exchange rate. Now when at the date of transaction you have purchased the goods worth rupees $500, isn't it, and the rate was 70 rupees, so now you have to pay 35,000 rupees to your creditor. ठीक है? So at the date of transaction you are going to show it at 35,000, that is correct. But as per the standard, at the balance sheet date you have to look at again at this amount कि now this creditor, now we owe how much rupees to this creditor. Earlier it was 35,000 at the date of transaction, but at the closing date, at the balance sheet date, that is at the date 31st March 2021, the rate was something different. Rate was 60 rupees. Oh, so it's a benefit for us. Earlier we have to pay $500, so the exchange rate was 70, so we had to pay 35,000. We will go to the bank and we will give 35,000 to the bank and they will pay us $500 and we will pay to the creditors. But now on 31st March 2021, we don't require 70 rupees for $1. We only require 60 rupees for $1 to exchange our money with the bank. So that means that is our profit. How much profit we are getting? See what is happening here. Now the creditor is of $500, you have to pay in dollars 500, but you are going to exchange your money with the bank by paying only 60 rupees, isn't it? So you will only pay 30,000 rupees as at the 31st March 2021 to cover your liabilities of this $500, right? So that is giving you the benefit of 5,000. Oh, you can in the shortcut also you can calculate this. How? I'll tell you how. $500 was there and 10 rupees profit is there, so that will be 5,000. In shortcut you can calculate your profit at 31st March 2021 as rupees 5,000. So 5,000 you are going to recognize it in your profit and loss account. You are going to credit this. Easy enough, very easy. Now at the time of repayment, see at the time of closing of this account your creditor is 30,000 in your books. Okay? Not at the dollar. You have to record all the creditors in your reporting currency. Your reporting currency is in rupees, so you are going to recognize it at rupees 30,000. But now at the time of payment, oh, rupees have further appreciated. Okay? Now it is 55 rupees for $1. Means the dollar is not getting expensive. Okay? Your rupees are being appreciated. Okay? Okay. So $500 multiplied by 55 rupees. So now you have to only give 27,500 to bank to get $500 so that you can pay to the creditor. So again the profit of how much? 27,500 right now you have to give, and you have shown it. The carrying amount is 30,000. So that will become 2,500. Yeah, 30,000 minus 27,500. So 2,500 will be credited to the PL account as on 31st March 2022. So the answer would be option number C, gain of 2,500. Very easy question. Okay? Accounting standard for effect of changes in foreign exchange rate. Right. Now, as per AS13 is accounting standard for investment. The carrying amount of long-term investment. Now remember, for the short-term investment, what you do? For the carrying amount, you take lower of cost and the fair value. But for the long-term investment, please remember you are only going to show it at their cost unless there is a permanent decrease in the value of the long-term investment. So please remember, for the long-term investment, the carrying amount will be cost only unless there is permanent decrease. If there is non-permanent or permanent decrease in the long-term investment, then you will take the decreased amount. But other than that, you are going to carry it on their cost only. So the answer would be option number A, at their cost. Very easy question. By looking at the first option, you can tell कि this should be the answer. Okay, so option number A would be the correct answer. Okay. Now that's all for today's class. We have done beautifully 25 questions and very much advanced question we have done, including so many numericals. Okay, so please remember you have to practice and practice more and more MCQs. For that I have already told you how to go to the website and how to purchase the course of the test series, right? Now, if you want to basically follow some free resources, what you can do, again go to the website and click on free material, click on blog. Inside this blog, you will find several categories. Inside this category, click on SEBI Grade A, and inside the SEBI Grade A, you will find different blogs here. Okay, free of cost. You can read all these strategies of the toppers, strategy to cover all the components, right? And why MCQs are helpful and all. You can check it out, all the blogs here for free. Plus, you must join our Telegram channel to get basically to get updates about the videos that we come up with time to time in our YouTube channel. So for all the notifications and for all the updates, just click on this join now button, and there it will redirect you. It will redirect you to the Telegram channel, and from there you can join the channel, and you can get the latest notification about each and every video, so that you are not missing any important video, just like the today's video, right? So you have to revise all the concepts we have discussed today, and you have to practice all the MCQs that we have done today, right? So do let me know in the chat section what was the level of the questions in today's class. Should I improve, should I basically increase the level further in the next class, or should I decrease the level? Have you found it very difficult to answer these questions, or it was moderate enough? Should I increase the level, or should I decrease the level in our next class? You should let me know in the comment section below the video. Okay, so till then, tata, bye bye, thank you, and all the best for your preparation, right?